Hi, I'm Chris Kapches, president of Chestnut Park Real Estate, and today we're going to look at the Toronto resale market for the month of July, and have to begin by saying that it was extraordinary, record-breaking in a variety of different ways, particularly in terms of the number of sales that were reported. For the month of July, we had over 11,000 sales, which was almost 30% more than we had in July of the previous year. Literally an eye-popping number of sales for July. Having said that, of course, July is really probably May this year, given the impact of the pandemic pushing the market forward into the year. But notwithstanding that, and given, of course, the restrictions for showings and other things that the economic fallout as a result of the pandemic, having those sorts of numbers are incredible. Semi-detached properties, detached properties did exceptionally well. High-end properties did exceptionally well in the month of July. Not surprisingly, at the end of the day, we actually see the average sale price also reaching record levels, breaking the record that we set just a month ago in June, coming in at $943,000. And that $943,000 is for the entire GTA. In the city of Toronto, the average sale price came in at $1,016,000, which is even higher than the overall GTA number. So incredible numbers coming out of the July market. So surprising numbers given the fact that we've had to deal with showing restrictions, the economic fallout, the economic fallout through a variety of different business sectors. So great numbers. Driven to some degree by the fact that we have a shortage of available product. Our active listings were still down by 16% compared to last year at this time. And on top of that, we have exceptionally low mortgage interest rates. You can get a 5-year mortgage for less than 2%. That's historically low levels. And then we all know that the fuel to a resale marketplace is low mortgage interest rates, and that's what we have. So that's the kind of market overall that we're looking at. A couple of areas that should be mentioned that have not fared as well as the overall marketplace, and that is condominium apartment sales. They have taken a hit somewhat differently than the overall market, and probably for obvious reasons. The pandemic has caused people to seek more space, more sanctuary. Very hard to find sometimes in a 500-600 square foot condominium apartment in high-rise building with maybe 2 or 3 elevator shafts. So we've seen the condominium apartment market operate differently, particularly in the second quarter. It did revive a little bit in July. Average sale price was up and the number of sales were up, but it didn't respond quite as positively as the rest of the market. And similarly with the rental market, we saw the rental market take a hit in the second quarter, and I suspect that's going to continue into the third quarter. A huge number of additional listings, up by almost 42%. The number of rental units, primarily in the apartment sector, dropped by almost 30%. So the condominium apartment sales, resales, and the rental market were the only two kind of weak spots in this marketplace. But overall, the market extremely strong. Early August numbers indicate that we're going to see not quite a repetition of what we saw in July, but again, a very strong August, much stronger than historical August, and almost at this point I could guarantee that it's going to be stronger than August of last year. And again, driven by those exceptionally low mortgage interest rates, huge demand, and not as much supply. So I look forward to bringing you the August market report a month from now. Thank you. And before I leave, Our latest issue of Invest in Style is now available. It's a digital issue. You can access it by going to investinstyle.ca. It's got many stories which you'll find very interesting, ranging from art to craftsmanship to a variety of different subjects, as well as some very interesting properties. So please visit investinstyle.ca to see our latest digital version of Invest in Style. Thank you.